he has been tracking all these scandals for years and is really the first place you go to on the web if you want to really find out, see the scandals before they become mainstream news. They're usually being covered by Jim on his website up to a year or two in advance. Now, Jim Willie, you have some updates for the On the Edge show regarding the Bank of International Settlements gold swaps. Give us a brief background on the Bank of International Settlement gold swap story, then tell us what the update is you have from London.
Okay. In late July, there was a story about the Bank for International Settlements and a 340-ton gold swap contract. All right, it aroused a lot of suspicion. It generated a lot of stories, and I think some diversion stories were permitted, like they were helping out some commercial banks. And then later, coincidentally, a similar amount to the 340 tons was the supply and inventory of the Portuguese central bank. Well, I came to learn through my sources that the London Bullion Market Association, I call it the London Metal Exchange, London Gold Market, it suffered a heart attack. There was a good clue because there was a coincident event on July 24th. The LBMA went, as I call it, data dark. They closed their access to data, did not share any of that access, and actually said things like, for members only, and if you want to become a member, it's £25,000 and you need 3 references. It was a bunch of BS. What happened was the London LBMA, suffered a heart attack and suffered raids. These are not illegal raids. They're perfectly legal through contracts that they sell called futures contracts. I mean, they may defraud on their end, but if a person wants to go long and have a delivery, that's perfectly legal. So what happened, according to a source of mine who actually knows some of the participants, let's call them the Dirty Dozen, but they're heroes. A dozen or so parties, think of billionaires in the Arab world and China and maybe a Russian or two, I don't know. It's mainly Chinese and Arabs. The billionaires demanded a huge amount of gold. They employed 2 insiders within the supply stream, within the LBMA itself, who helped coordinate upstream sourcing of gold. They did not use any Brinks insurance contracting because, as they say, it would have displayed red flags for the simultaneous legal raids. They employed military precision. They were underestimated by my source, who claims that the London boys just figured, well, they can't pull this off. It's too big. It's too much. It's too diverse. But they did. The military precision was astonishing. London fellows were defenseless. And as my source says, this will not end until the Anglo bankers are dead and denutted. They're being exposed for their fractional practices, which are anywhere between 45 ounces to 100 ounces being sold and bartered with, or whatever, per ounce that they've actually got. They're involved in a huge fractional scheme that's backfiring. And my source said the raids will be conducted every 10 to 14 days until these guys are dead.
Okay, now let's fill in some of the background information here and some information so that viewers can get into this story and follow along, because it really is a dramatic story that's happening in the global markets, and it will affect everyone, every country, and everyone living in these countries. So, in other words, gold and silver, but principally gold, traded on the London Bullion Markets Association. There's 2 ways to trade gold. There's the physical gold, people buying and selling the physical metal, but there's also the futures contract, also referred to as the paper market. In the London Bullion Markets Association, and we know from recent testimony made to the CFTC, the Commodity Futures Trading Corporation, from insiders within the London Bullion Market Association, that they, in fact, they have 100 times, was it 10 times or 100 times? I think it was 10 times more paper outstanding than there is physical gold. Okay, now.
I think 100.
Oh, yeah, okay. Thank you. It was 100 times greater. Now, flash forward to where we are today. there are a few billionaires out there, let's call them gold vigilantes, who see that the price of gold has been kept artificially low for years, if not decades, as part of the growth of the monetary school, the Milton Friedman school, the Ben Bernanke, the Alan Greenspan school of monetarism, which thinks that they can create a virtual gold standard with paper and get away from gold. There has been a suppression of gold for a number of years. It's covered in your newsletter. You do it every couple of weeks now. You have for a few years. These billionaire gold vigilantes, sensing an opportunity, have forced the exchange to give physical delivery, thus exposing the fact that they don't have the gold to deliver. So the exchange itself has to go into the market and buy physical gold to cover those requests. And this is what we call, of course, a short squeeze. And this is driving gold to yet another new high today as we're speaking, with silver just under setting a new all-time high. So you've got this massive short squeeze, you've got the gold vigilantes, you've got the global Ponzi scheme that is the U.S. dollar, which is imploding in real time. Now, what's this going to do to the U.S. dollar, Jim Willie?
I think we're going to see eerie quiet with the currency markets, with the dollar and the euro not moving dramatically up and down, not seeing great volatility, because the dollar and the euro and the pound are in similar dire straits. I think the signals are going to be given from gold and silver, maybe platinum as well. And gold, I think, with its signals are going to be somewhat ignored, because they're going to say, well, gee, the exchange rates with currencies is stable. I call it eerie quiet. I'd like to point out that these gold vigilantes are more than just that. These are angry depositors who are really ticked off that their allocated accounts have been raided by the London Bullion Market Association. These are not unallocated accounts that the billionaires hold. They're trying to protect their wealth and retrieve it, take it to Hong Kong, take it to Dubai, and get it the hell out of London, and maybe Switzerland perhaps as well, because they're fearful that the organizers and managers of these exchanges are illegally taking allocated accounts.
Okay, let's talk about this for a second. Just to give viewers some insight into some of the terms here. So an allocated account is an account that expressly has your name on it. It's different than an unallocated account, like, let's say you're buying an exchange-traded fund like GLD on the New York Stock Exchange. Yes, you have theoretically a share of a pool of gold, but your name is not actually on the gold. That's an unallocated account. An allocated account would have actually your name on the account. The beauty of owning an allocated account is that it cannot be used to finance anything else in your name. And when I was working on Wall Street, of course, we had the difference between securities held in street name and securities held in the client's name. And of course, many smart clients always had the securities held in their name so that they weren't used to sell short in other things that the brokerage firm could do. A similar kind of concept. Smart folks want allocated reserves that are in their name. So here you have the facade of an allocated account being used to being basically ripped out of the exchange, and the gold is simply not there. And it's your feeling, Jim Willie, is that this story is basically like Mount Vesuvius about to erupt. I mean, we're talking about a global scandal here that's much bigger than the Bernie Madoff scandal, much bigger than the crash of 2008. Am I not right?